Good day, ladies and gentlemen. Alright, so what do we have in store today? And let's jump right to this 1 hour chart. This is the chart that we marked out yesterday, and I think I think there's opportunity here. I'm going to show you guys now. And just before I carry on, you'll see I've got no video on, and that is just me trying to give you guys better quality from what we experienced yesterday. Alright, so let's have a look at this. So on the hourly, we've got this fair value gap that got inverted yesterday. We thought we're going to do a retest. We did test it, and now we're sitting here. We've got this equal lows down here. We've got this target within this fair value gap, and if we jump to a 1 minute, you guys will see we've got equal lows forming here, and we've got higher low, maybe get something up here, and then a drop into these equal lows. Alright, so those equal lows is what I'll probably will look for at 9:30 to get to. And if we mark out the swing point here down to here, you'll see that is a nice inverted fair value gap here. And that's coming out of a fair value gap over here. And that is probably the one thing that would send price lower. So what I'll do is I'll actually take a short here, a bit late on that short. And I'll try to squeeze out $1,000 here and see if that's what we're gonna get. Alright, so that to me is probably one of the better trades. It's obviously coming out of a fair value gap. Guys, normally I would not take a trade before market open, but I think I'm going to try this one anyways. Because of these equal lows, we might see a push down there when market opens at 9:30. This is obviously a nice move up and rejection, and now we see some, hopefully some good push down here. Remember, we've got liquidity down here. We are bearish at the moment because that hourly right, so now we just have to sit and wait and see what if we want to take this equal lows out and actually targeting these equal lows down here. The reason I'm not pushing this further, that's a home run. I think these are quick and easy targets. I took a trade a little bit late. The right entry would be the test of that IFVG, and the minute we break this low, you move it to break even. We haven't broken that yet, so I can't move it to break even yet. So we'll just have to sit and wait and see. How it plays out. Okay, so what I've done, guys, I've taken off my video just to make sure we can get better quality today after what we've experienced yesterday. So let's just keep an eye and make sure that everything's fine. Yeah. Okay, let's see if we can get that pullback. I mean, if we want to see this pullback, it's right there. That's a fair value gap. See if that can hold price. If you want to go deeper, it's most probably going to go to this IFEG if you want to test that. Yeah, let me know your comments your thoughts in the comments below, whether you like you know, different targets. What are you looking for today? All right, there we get to testing that fair value gap. Let's see if it wants to hold. That would be textbook if we can hold there. That dotted line is the 50%, so let's keep an eye there. A little bit of squeeze through that 50%, leaving the upper 20% of that fair value gap unfilled, which is this part here. Okay, it's a nice reaction there. I'd like for us to close below this white candle's low. Sorry guys, I'm on a 2 minutes here. Now it looks better. Just want to see something here. And I said close, we close below that, which is on the 2 minute, which is a good sign. And now we hopefully would see okay, so at this point my stop is at break even. Hopefully we don't see price go all the way. If it goes stop me out, then we'll just hunt for another setup. I just know there's 3 lows there that's making those equal lows, so we just need to keep an eye on, see how this is going to play out. And there we get a nice rejection through those equal lows, and now the hope is obviously for price to continue lower. And it would be good to see this candle close below these equal lows and try to push it for those equal lows marked out earlier. Okay, now let's see. Let's see. Alright, so if we take that swing low, high to that swing low, above this 50%, we could see a spike through and then drop from here. I think our stop should be fine. If we break higher, then this is the stop rate to push price higher first before it comes down. Alright, let's see if we can. Market's opening in 3 minutes. Okay, so this level up here, so we could see this 50% in this, or just this IFG get tested here. Probably look at something like this. So taking this thing out here, if we invert this fair value gap, I'll take the short. That is if we do it. And what I want to look at quickly, regular trading hours. Okay, so we've got a bit of a fall happening up here. Okay, so we've got these equal lows here. I'll take these out. And that's the trade. I just missed it. If I say I missed it, I wanted to get it up there, but I mean, happy to target 600 on here because of the inversion here. We could actually push lower, so let's make it to 1,000. Come on. see is if we're going to go for these equal lows down here. I mean, this is obviously the low hanging fruit. And I think the minute we go down there, I'll probably move my stop to break even, yeah. Okay. Alright, let's see if we can get that pushed down. So if we can get that push up to get stopped out here. Right, got stopped on that trade. Should have taken those equal lows. I mean, that's your low-hanging fruit, but see where we want to go from here. Alright, let's see, 930 was here. So this is the first opening gap or first fair value gap. Call it the first. I mean, on the hourly, we've got equal highs up there. I don't know if that's where we want to go to, but let's keep an eye. Okay, so these equal lows were taken there, come back, invert, equal lows taken, and then this is the first fair value gap. I'll take that one out, because this is your inverted fair value gap here. that as a fair value gap there. Sorry, I'm jumping around here, just trying to mark everything out. Okay, so I'm taking that out. This is the fair value gap if we want to see some sort of a test. I still think there's a lot of downside here. Let's jump to 1 hour so I can show you guys what I mean. So got these equal highs here. We've got a shift down here, inverting that fair value gap, going for a test gradually. So there's no immediate push down. Those equal lows been taken. I'll take that out. There's equal lows here, down at this 22.89 level, and I actually don't know what this looks like on a daily. Let's see. So we still got this highs here. I mean, then we've got this massive fair value gap down here, so which hasn't been tested, so we could see a test in there before we want to go higher. Okay, so now we've taken these highs here, so let's see if we're going to break through these two fair value gaps, test to go lower, and then I will most probably look to get to this 90 level down here. This move here was taking liquidity on this side and then try to induce people there. That is if we get this break lower, then I think we would go lower. But yeah, running both sides, maybe this is the test to go higher. I don't know, we'll have to sit and wait and see. Yeah, at this point it's very messy, so you don't want to get involved in the middle of this. So yeah, it all depends on what this fair value gap and first fair value gap going to do next. Okay, let's see if that first fair value gap can hold price or I'm going to sell to here, goes below it. Take an order there. Gosh. See if we want to go all the way there now, or is that something we want to hold for FOMC later? All I know is aggressive through this fair value gap. This is obviously now an inverted fair value gap. And we close below the first fair value gap. So I would like to see this white candle hold price and not break higher, but then sell off from here. Right, let's see if we can get this pushed down. $22.90 level is my target. Looks like it's going to struggle to get there, but let's just keep an eye and see. I mean, guys, it's FOMC. We could see price just take a sideways move here, but I do think because there's aggressive momentum behind this IFEG here and this first fair value gap. We did test into this little fair value gap here between this IFEG and first fair value gap, and now I'm expecting, I don't know if it will happen, but I'm expecting price to run lower, and my next liquidity here is this equal lows down here, and let's see if we can actually get that far. Mark out this fair value gap here. In order for price to go higher, it's got to break through this first fair value gap, and inverted fair value gap. So it's a brick wall. I'm not saying it should hold price, but there's a lot that needs to break through there in order to go higher. Can happen, but I'm favoring obviously price to go lower to those equal lows. Now it's just a matter of time. And remember, the 950 is around here. That's where the macro starts to run. Then we've got that 20 minutes, and hopefully we'll see that 20 minutes going down to the 2290 level. Right, so first 15 minutes is also done, so that would have started around here. That's the high. Yes, the low. So this is going to be that breakout for people who like to trade those breakouts, to break out, test, and then go down. What we've seen earlier, these equal lows here were taken, aggressively move up, taking these little two equal lows here, and then come down, inverting a fair value gap, creating a new fair value gap, invert the first fair value gap, and just test this. And now the expectation for me at least is to target these 2290 level, which is the first equal lows. If we smash through that, then obviously we've got more downside here. But for now, I mean, it's FOMC later today, so I don't know if we're going to leave those liquidities there for later, or if we are actually going to go there this morning still and do nothing in FOMC. So we'll just have to wait and see. The minute we break these lows to go lower, I'll probably move my stop to break even here, and see if we can ride it all the way down. Right, so now we see a little bit of a consolidation here, not taking this low out yet. We could see spike into all of this and reject to go lower, or just drop from here. I mean, yesterday we were looking for those spikes up to get entered, but then we just saw price aggressively dropping down. And basically that's what we said on Monday, because of the public holiday, and price was just grinding sideways. Eventually got to our targets, but we did say we'll see some sort of acceleration on Tuesday, which we did see yesterday, and with that we didn't even get any entries. Okay, so let's see. Alright, so there is the push that I'm looking for. Now I need to see if it's going to hold. Alright, so this is where I'm going to put my stop at about $100 there. So if it comes back, I'll be fine. And now it's just a matter of tracking this down. Okay, come on. I think we're on the right side of this trade, to be honest. I don't think we're going to see the rush up here now, because we've tested both these fair value gaps. We've violated this low and we closed below it. That's key. If we spike below it like this over here, we saw this pull up. If this was just a spike below this, we could have seen a deeper pullback here, but this can still pull through. Just want to say it would have been annoying if this is going to go and stop me out here. Oh, come on. And this one, don't take that out and form a nice swing high, or not. Creating a new swing high here and then start breaking down. I mean, if price gonna move through here now, then I think those liquidity areas most probably gonna be left alone for FOMC. Be great if this is a swing high, but if we're gonna go higher, then I'll happy to just let it be. You're not always going to be right with these things, and all you need to do is, when you're wrong, you need to know where to get out. And the reason I've put my stop at 50% is we've already spiked through it here, so I don't know if we want to do it again, and that's why I'd rather keep it there. If we go through it, we might go higher. If we don't, then good, then I'm safe in my trade. And yeah, let's see if we still want to go lower. Alright, so this, you want to see hold 192. So I'm just moving my stop there, because in theory I don't want to see price take out that high, so I feel my stop is safe there. If we do go there, then it's fine, and it's most probably going to go higher, and I don't want to risk, you know, my money. And people might say, okay, it's $100 to $40, $60. Well, I mean, if I've got a defined metric to prevent or tell me when I'm wrong, I'll rather lose $40 than $100. So that's why I'm moving it like that. So, and that doesn't mean I'm moving it every time we make a little swing. I'm just reading price here, and I think that's the way we should go. We made a lower low, lower high. Now I'm expecting a lower low here, and if we do that, then it's not so bad. If we take this low out, I'll obviously move it to break even. Then there's nothing to lose, and then hopefully we'll get a deeper push lower. Or if it push through it, then we could always test it to go lower. It all depends on how price is behaving around this gap or this little wick. Let's make it so you guys can see what I'm saying. See that 50%? Perfect bounce, but if we go through it and test it to go lower. See, that's the bounce now. Let's see what this candle does. So in here there's no fair value gaps to retrace to. So if we want to go down, we should go down from here, and or if we're going to go up, we're just going to go straight up through it. Okay, so here we can see lower highs, and now we see higher lows. So that's typical, where we see price go and then boom, boom, or boom, or just going sideways. I mean, in this case, if you're not sure which way market's going, when you see bounces up, down, bounce, you would think this is going up higher, and then suddenly you see this move down. And at some point, that's when people, you know, put their hands up in there, and it's like, guys, I don't actually know if the market wants to go up or down, up or down. So, and that's why it's so important to have obviously a model that tells you where price should go and how you're going to enter, and when it goes against you, where is the tipping point for you. For me, this high here, that's the tipping point. If we go beyond that, I'm out. That was before. Now we formed a new one, but we need to take this low out. And in theory, if we take the low out now, this swing high here, that's the new type of place where you could take a stop if, well, that's why I would put my stop if I take the breakout here. And then we get the push down. And you don't want to see anything close above this low. If that's the case, I'll just close the trade, but I'm going to make it smaller here so we can follow along. And what did I say? I'll move it to break even. Alright, I'm at break even now, so I can't actually lose money here. Now I just want to see expansion to the downside. I mean, if you feel it's too risky, it's FOMC and price might turn on you, I mean, now's a good time just to take profits. And if it goes down there, not to blame yourself, why don't you hold it longer? But there's a little fair value gap here. Should hold price. So far the move looks good. Alright, as long as we keep taking the lows out, it's not bad, it's good for us. Keeping this stop tight in case we see violent pushback. I mean, we could go into this fair value gap and run these two highs here into that 50% and then drop. If we do that and we take this out, I'll move my stop to there and then trail it all the way down. I'm all about watching to see what price will do in this fair value gap. If we invert this, I'll just close the trade, because then we might go back up here and play with us to go down here. Or if we go spike in there, come down, take this low out, then I'll move my stop there and see how far we can push it to the downside. As you can see, price is just stalling a bit there. And you know, sometimes it's normal for price to push down, stall a bit, do some pullback, and then continue lower. Alright, so let's see. Be a great trade if we can take that 2290s before FOMC. Alright, so now we can get some sort of momentum to the downside. Now I'm leaving my stop as is and I'm not moving it, because we could still see a move back up before we want to go down. Okay, so let's see. See what's gonna form here. Alright guys, so the very first fair value gap that gets inverted, I'm collapsing the trade. Okay, so we've got a fair value gap here. Hopefully can hold price here. Remember, all these lower highs, that liquidity there, that liquidity, that is all. Once we bounce here, we could go all the way up and then go down to our other target. Remember, our one target is here, then we've got another target down here, the 42 levels. I thought we're gonna keep that intact till FOMC later, but we might see this get run, you know, in this AM before 11 o'clock still. Alright, let's see if we're going to form a nice swing low, a swing high there to take price even further down. Right, I'm going to secure $1,000 here. If we do any funny stuff from here on, at least walk away with $1,000. If we don't, then we could walk away with 4,000. Or if I'm scared, I can get out now for 2,000. And if we invert this, I'll just collapse the trade. That's a swing high. This could be liquidity on that swing line, a swing high, and then send price lower again. Okay, let's see if price can hold under that dotted line there, and see if we can get that push down now. Right, so if we mark this, if we leave the swing high here, that would be a good place to move your stops. But bear in mind, this fair value gap has not been filled yet. So it's also important to know where to move your stop losses to and not move it too quickly, because some people put their stops right here and this thing could quite easily bounce in there and drop to our targets, and then people are like, oh, I should have left my stop here. But it's also important not to leave your stop at break even for the whole move, and it's always good to money off the table when you can, but also with the right mindset and not taking money off too quickly, but also don't sit with money in the market for too long. I mean, for me, first price is to go down here, but I'm also happy to put my stop above this fair value gap here and see if we can get there first before we want to do any funny stuff. And if we do, I don't want to see price close above here or spike very far outside of this fair value gap. Hopefully contain it within the fair value gap and then come down. Right, so there's the move. I can't close my trade yet. I want to see that candle close outside of my last fair value gap down here. But if we want to move, I would like to see this move quickly there and come back. Alright, so I've taken the trade off because we closed above here and I wasn't sure what it's going to do there. So we're up $1,500 for the day, which is not too bad. This is still the target down here. I just want to make sure I secured my profits so I don't see this little gap to become the new fair value gap to send price higher. And yeah, and I don't want to be in a position where I give, you know, all my trades back. So all we got to do now is we can still track it. I mean, I can always re-enter if we invert this little fair value gap here, or, you know, running this high, there's a little fair value gap here. I'm gonna leave that one as an inverted fair value gap. This could be an entry here if we close below this blue block. Let's just move this here so people can see that's a target. Okay, so here we go. We get a nice push through. I don't know if I want to enter again here, because I feel like I don't want to. I mean, I've taken it out there because of my rules. Now I just want to sit and see. I mean, this could quite easily just go down from here, but yeah, it's just one of those things, right? Nice pullback into that wick for an entry, but we didn't touch or test this actual IFEG. Okay, let's see, maybe invert again, and then I'm happy I'm out of this trade, because then we might see inversion, and just a little crappy move. So for now, let's see, that's the test. That's where you would normally take your short, and then you've got your target down here if you wanted to re-enter. Alright, let's see if we can go down now. I mean, a lot of people say, oh, you should have just left your position. Yeah, I should have. But That told me we want to go higher. That told me we want to go lower. That tells me we still want to go lower. That rejection. So I'm happy with the trade. And this low is a break-even trade down here. And then I want to see it move down there. If we don't get there, then it's fine, because now I'll tell you, this is the next drawn liquidity because of these equal highs. And these equal highs is sitting and resting right in this fair value gap's bottom. So we could see price actually go boom into that and then come down. Like I said, this is where price is not worth trading, because the minute it starts inverting and just screw around, maybe not worth taking the trade. Higher lows, higher lows, higher lows, higher lows. So maybe a higher high here to take this liquidity out. Okay, so price is a bit stuck here. As you can see, it's going to go there. And I mean, that's where you should put your stop loss. But if we take these lows out, you'll move your stop to there. But I don't know if we're going to go down now, to be quite honest. This looks like dreadful to me to go up there. Okay, let's see. Okay, so the IFEG is holding price currently. I want to see it take these lows out and close below it. And not run it and then go higher. Alright, moving my stop there. And the reason I say that is that high should hold, but got this feeling that we might just shoot through it, which is fine. I don't want to sit with it all the way there and then it decides to go even higher. So if it wants to take me out here, then it must just do that. Okay, so there we go. I'm out. I'm still in the green for the day, but yeah, so that's just one of those things. As a scalp, if we're gonna go there, and that's just to see if it's gonna play out. If we go there first, I'll just close the trade. But you need to see some sort of a test down here. Okay, so there's a little gap there. That's where my entry sits. But if we're gonna go there first, then I will just take it off, like yes, taking that off, because we already run into there. Okay, and as you can see, we run right through it, and there's a possible chance that we're gonna even go all the way back to our friends up here. Or we're gonna reject all of this and then we're gonna try and invert again. Okay, so I'm not actually gonna use this IFG further because it's done its job there. I gotta look for something else. As you can see, that is how it works with FOMC. Running all the way back up there. If I was stuck into my trade down here with no stop, or left my stop up here, I would have been stopped out at break even, no profits, whereas now I'm walking away with 950. I could have do more than that, but it's also fine. I tried to trade here because I thought that's what we want to do, and yeah, that is a very good example today to show you guys how we managed to trade, how we found a nice trade. We did not get to our target, and that might be something that's going to stay there till FOMC later today, and how we managed to get out of the trade, seeing new liquidity, price to go there, didn't get the entry, but we managed to spike through it, and we've taken, I think, a loss along the way as well. At the end of the day, it's all about how you manage your risk, and I mean, knowing where the target is, but also knowing where the opposite target is, where you want to get out without losing all your money or not taking any money off the table. Okay, so now I think this fair value gap is obviously an inverted fair value gap. And maybe now we're going to test this to go higher again. We'll just run these highs, which is this liquidity in here. Boom. See how we spike through these IFGs. That's what's making the damage, and obviously the next target would be in this first fair value gap. Or at least this high here, and then there's a high there, high there. These are all lower highs. So all liquidity and maybe into this fair value gap up here. So we can come and test this again. I'm just going to take a trade here as a scalp to show you guys what I will target next. It's that over there. Let's make it 1,000 and it's fine. Okay, my stop will be right below here. So that's a quick 2 to 1. And why would I take this? We inverted this fair value gap, or this IFUG. We spiked in it. We rejected. And there's liquidity there, there, and there. So if you take the swing point down here, up here, that IFUG is below 50%, and you want to at least take that high out or run those highs to consolidate further. I'll be very surprised to see price drop below here. I know there's liquidity building up here, then we've got this target down here, but I think we might be stuck in the center here, and with this rejection and taking this highs out, I think we might go there first. Or give us more reason why you should not trade prior to FOMC. Sorry guys, I don't know, we've been struggling with this streaming software or trading view and connection. I was looking to my other monitor here and I didn't see the trade being stopped out, so I was a bit surprised there. Anyways, don't go there, and if you look closely you'll see it's all higher lows, higher lows, higher lows, and that's all liquidity that's building up for later. I think if I get stopped here or profit take first, whichever way, I think that's going to be me it for today. I will then come on for FOMC later, and we can obviously have a look at it together and see how we can make money. Okay, so now I'm just going to sit and wait and not do anything drastically. Yeah, I'm just going to relax for a bit. Yeah. See if we can get to that target, to those highs first. Look, if it wants to go down now, it must take me out. And the reason I say that is because, I mean, FOMC, we see price going in all directions. We'll mark out obvious liquidity, and then we'll see market go the other way. And I actually thought at one stage we might go down just before the target turnaround and go back into the range. As you can see, we're slowly grinding our way up here. Again, come on. That's 50% there, so I would most probably think this is the target. You'll see when we get closer to those highs, we might see this quick poke into there to stop everybody out, because at this point everybody who's short here with stop losses here is praying for price to go lower. That's why you'll see slow move down, slow move down, slow move maybe down, and then boom. And that's just to play with people's emotion, to stop quicker, to take losses or small profits or whatever they do. Yeah. See, at this point people think, see, it's so solid, price can't break through it, and then suddenly we'll see a big spike. Right, so we're aiming on getting this profit target hit in a second or so, and then I'm going to end this off and wait for a PM session. I mean, we're right on the take profit there. So all I need now is this move down and then suddenly boom, reverse and spike. Okay, now it's giving your retail people some hope again. spike. Right, and that's it. That's the targets that we marked out there. That's the spike. And it's basically almost textbook type of thing, when not to trade, when to trade, when to cut your losses, and you know, and so forth. But anyways, guys, that was absolute pleasure trading this AM with you guys, and I would love to see you guys in the PM session again. I'll be on it. And thanks for the support for those who joined in. And if you made money, good. If you walked away with losses, you know, journal, make sure you learn from that. We ended up just short of $2,000, 1980, which is not bad. And there we go through the target. And yeah, so yeah, thanks again, and I'll see you guys in the next live stream. Take care. Bye bye.